This is the best video for those who want to finally figure binary options out and start stably making money online with no stress. Does that sound like you? Then this video is definitely for you. Let's start. Hello my dear friends, this video is for those who want to learn understanding the market from scratch. Today we're going to dive into a huge part of the whole theory and of course apply it in practice. I'm going to try my best to demonstrate you deposit ingredient from $100 to at least $1,000. So I'm sure it's going to be real fascinating. Make sure to watch this video until the end. I'll provide you with a step-by-step guided strategy to trade by yourself and make money at any convenient time of the day without the need on dependent on anyone. Naturally, we'll start off by clearing up some aspects of technical analysis. It's the basis you gotta confidently comprehend if you want to trade on your own. So this video is literally perfect for beginners, if for those who want to understand the market's operational principle and how exactly you can make money with it. So guys, first and foremost, we ought to enable the candle chart type. The linear chart type doesn't hold the entirety of the data we require to forecast the upcoming occurrences. As we already know, the market is a cyclical being, which essentially means it repeats itself time to time. And exactly these repeated elements caused by the market cyclicality allow many to make large sums. Basically, if one certain pattern has occurred dozens of times, chances are it will happen once again sooner or later. And since we know the nature of these patterns and the chart behavior following them, we can easily make money with those occurrences with no issues whatsoever. So let's finally get to trading and placing our profitable deals. To the theory, essentially. For starters, let's clear up this simple case displayed on this chart. What can we see here? First of all, we can see an upward tendency. How to understand it's actually one? I think first of all, it's just obvious even at first sight, the market is definitely rising. And secondly, it can be easily determined by the color of candles. Green candles stand for the asset's growth, the red ones stand for its falling. So in this case, such big and confident green candle prevail candles, and now a corrective retracement formed by these red candles has started. So we define the most important aspect, the price motion manner. We can see the market is moving upwards. Here's the beginning of the motion, and here is the end of it. And this is the end of it in terms of any upward or downward motion. We also have levels and trend lines. You gotta understand what levels and trend lines are just as well. For instance, the market moves this way, just like in the current case, smoothly, step by step, occasionally rolling back. We can thereby draw a trend line through a bunch of chart reversals the way the chart touches the line. In order to draw such lines, we only need 2 points. We mark the points, the market reverses that, looking for like 2 or 3 such touching points and draw the line. Here, for example, we can draw a trend line through these 2 or 3 points. This is what the trend line looks like in this situation. The chart is rising and then rolls back down to the trend line. I hope it's clear. Which is followed by another growth period and another rollback to the trend line. Another rise, another rollback. And as we can see, it had happened multiple times up until the market finally broke through the trend line. There can easily be several of these lines. The market might fall to the second trend line, essentially after breaking through the first one, etc. So our goal is to wait for the price to touch the lines. Today, we're going to be using both the main lines and let's first of all draw everything we've just marked in the chart once again. Here's the first trend line drawn through the 2 touches. Let me do it real quick. And now we're drawing another one since we got a reaction at this point right here. How do we understand we got an actual reaction though? Pretty simple. The market moves with normal wave-ish motions up and down, up once again, and back down, etc. So on. We notice that as soon as the market reverses, we start paying attention to the points it retraced from. Because, reversals don't happen for no reason. There's probably a big player out there or a group of them interested in a certain price level. So we can draw lines through these reversing points, both horizontal and slanted, trend lines essentially. So later on, we have all the rights to assume that if the price bounces from a particular level twice, whether that be the top level, the bottom one, or a trend line, doesn't matter. What are the chances the chart will bounce from it for the third time? I believe the possibility is quite high. So in these situations, we can use the market cyclicality to our advantage because we understand we will probably get some kind of a reaction for the third time, so we can feel free to use the reaction to make a profit off of. So literally, nothing complicated. We've drawn a trend line right here, and as we can see, the price touched it for the first time not a while ago and has now gone for the second touch. Our current task is therefore to wait for the market to touch the trend line for the third time, and we will click the higher button as the chart primary bounces up in this case. So after running some quick analysis, we've placed the first trade. Let's look at the situation from the perspective of the analysis we've done. There are these obvious reversal points right here. So we can mark the reversal points by both the body of the candle, which is the main thicker part that I'm showing you right now, and the shadows, these lines that go beyond the body of the candle, such, candle wicks, so to say. We can see 3 reversal points in the chart at the moment, so we've decided to place an upward deal at the 4th point and are now hoping for a reaction from the trend line. It is a trend line because it's a diagonal line and an inclined one that accompanies the downward movement. This trend line plays a role of support because it's located below the chart and doesn't allow it to fall. Throughout the trend movement, there was also a trend line that plays a role of resistance. We can go ahead and mark it by drawing it through the 2, 3, or even 4 touches. The number of touches is quite arbitrary, but you gotta understand each and every trend line is destined to get broken sooner or later, which is very clear within this example. There were lots of touches. I'm not willing to count the exact number, and then at some point the trend line gets broken through. When the price overcomes the trend line, normally the trend changes. There was this little short upward motion. It could have ended in a complete reversal of the chart, but that didn't happen. So the price is now moving between the 2 trend lines. One is above and the other one is below. So thus, this kind of scenario is possible too. Here we were lucky enough to catch a tiny retracing rollback. The deal amount was extremely very high, so our deposit has grown real quickly, and now the chart is breaking the trend line. When the price breaks through a trend line, it's basically pushed in the direction of the breakout. This is a very important support line. As soon as the body of the candle settles below this level, the price will accelerate its further fall. I hope it's clear so far. If you have any questions, feel free to ask anything. So let's get into a bit more detail now. Let me show you the level. Here it is, and it's very clear and obvious. Here's the candlestick, the body of which is fixed below the level. The level got broken, which was followed by this large and beautiful red candle. My deal is placed due to expecting the downward motion to keep going, since it's not really clear where the next levels are. We can switch to a more global chart and see that there is a level right here you can see very clearly the price could fall further towards it. And back to our local level. Let's see. The next candle has also appeared in red, and we are making another plus $92. Here I'm placing an upward trade at the second touch of the trend line. Again, everything's very simple. Let's clarify this particular case from the beginning. Here's a wavy trend movement that touched both the first and the second trend line. These trend lines play the role of support, so our trades are obviously upwards. Here is the first main line, and here's the second one. The price has unfortunately broken through, proceeding to drop down to the first line. There is no third line yet, as the first one has yet to have been broken, but when the price does overcome it and starts moving, like this, we will draw the third trend line. And so far, right now, we're witnessing an amazing reaction upwards. The chart touched the second support line and immediately bounced back up. So I guess we have clarified the trend lines. Now let's move on to figuring out the horizontal support and resistance levels. These are also important levels that we stumble upon over and over again all the time. They're no different from diagonal or inclined lines, except that they are simply horizontal. Basically, those are no longer trend lines, but horizontal support or resistance levels. Their placement principle is just the same. We'll look for two reversal points and draw a line through them. Normally, that kind of a line should be exceptionally horizontal. We're doing all the same steps here. We're looking for a couple of reversal points and drawing a line through them. As you could have already noticed, there's a resistance level right here. Here's the first reversal situation, as you can see, real nice. And here's the second good reverse movement. The price also came close to the level for the third time and bounced off of it. So here I've made another successful trade that got us a decent profit. However, the current rollback isn't that big, which probably indicates that the level is soon to get broken through. How does that usually happen? For instance, here is a horizontal level the price is getting closer and closer to. We initially keep in mind the trend is upwards. Therefore, the chart may overcome and break through the level sooner or later. And when the chart breaks the level, it starts simply rapidly rising or falling, if we consider this particular case. This is what I was talking about. You can clearly see it. The level has just been broken. So Fox, let's place another trade. We're real close to our goal of making $1,000. I think just a couple of more profitable trades and we will achieve the desired results. This case is just as simple. We've already worked with similar situations numerous times before. What we are doing here is drawing a trend line through the two reversal points. Therefore, when the price approached the trend line once again, we placed the trade with a trend. Basically, the advantage of this strategy is that we solely trade with the trend most of the time. When the market is rising, we're trading upwards, and when the market is falling, we're trading downwards. Meanwhile, when we trade in between of horizontal levels, it's important for the trend to be absent, meaning in those cases, we would want to see a sideways motion on the market, which is a situation that we call a flat motion. There is no particular direction the market is heading towards. There's no trends, neither uptrend nor downtrend. The market is simply moving from one level to another, from one to the other, and so on. So in such cases, we can make successful deals within the trading range between the upper and lower lines. So we're literally so close. Let's play the last trade for today with a humble amount of $100. Although we have legit increased the initial deposit 10 times already, you might have an arisen question: why do all these lines work if it's just a sketchy image of the market behavior within the chart? Yep, you're right, guys. those are just ordinary lines. Sounds odd that they actually successfully work out. The thing is, most traders, the vast majority of big players, trade with these same lines as we do. Thereby, when the market comes to a certain important area, to an important level, many people out there start placing trades downwards or upwards towards the same direction, pushing the price in a particular direction. So we've reached our goal of $1,000 balance. Thank you for watching this video. Don't forget you can trade together with me on my free Telegram channel. All the links are in the description below this video. I'm wishing everyone a lucky trade and time. See you very, very soon.